Welcome to Thriller Premium. Welcome to Thriller Premium. In-depth coverage and timely analysis of macro and micro happenings in crypto.
Welcome to Thriller Insider.
Hello, ladies and gentlemen, boys and girls from around the world. Welcome to another exciting episode of Thriller Insider. My name is Car Gonzalez. Today is July 5th, 2019, and I made a discovery. I know a lot of you are thinking, like, what do you mean you made a discovery? Well, it's kind of interesting because I didn't think this was going to happen. I thought a lot of people were paying attention to Bakkt and ErisX. You know, both of those are often mentioned in the same breath when people think of institutionalization of crypto. Right now, both firms are both looking into breaking into Bitcoin derivatives market with their own physically delivered Bitcoin futures product. But there are some key differences between them, most notably on full display about a month, maybe two ago. What's interesting is this particular video went under the radar. I don't see anybody else in the space covering this video. I looked at the views because it was just astonishing to me. There was only 59 views on it. 59 views for what I would probably think is some of the most important information about Bakkt, about ErisX, and about this whole institutionalization of crypto. It was amazing how much good information was in there and about where they're headed, where it's going, and what this all means for retail investors. Now, this is going to be a long-winded beginning, a middle, and an end. I hope to display ultimately what is ahead, what's in front of us, right? Everybody is looking right now to what Bakkt's going to launch here on July 22nd. It's going to be, yes, we know, a test bed of Bitcoin futures contracts, but with that will come its rollout into everything else. So I'm going to start you off with just a little primer, right? So first up, I want to talk about what ErisX is doing. So they're looking to obtain a clearing license from the CFTC, right? And just here recently on July 1st, they got their derivatives clearing organization license, the DCO. And that allows the exchange's upcoming clearinghouse to clear digital asset futures contracts. And those contracts will be traded on the derivatives market, which is also slated for launch later this year. So ErisX is doing one thing right now. And basically this license allows ErisX to comply with the CEA's 17 core principles, which include risk management mechanisms, allowing other procedures for member and fund protection. And of course, Thomas Chippus, he was in this talk. He was talking about all of this information. Then you also had, which was even crazier, you also had Adam White, who is the CEO of Bakkt. He was on the stage too as well talking. And they were all gung-ho for what and how the retail investors in this space and the retail builders like Coinbase, Kraken, Gemini were able to accomplish without any of institution help whatsoever. So take a listen right now to Thomas Chippus, who is the CEO of ErisX, as he explains what exactly they're doing and what's going on.
Chippis. I'm the Chief Executive Officer of ErisX. ErisX is launching a spot and derivatives crypto exchange and clearinghouse. I came into crypto after a career in, originally in fintech and then running large global trading businesses for Citi and Barclays. And we're excited to launch physically delivered spot crypto coming very, very soon, and subject to regulatory approval, I guess a traditional futures exchange. Certainly, ErisX is launching with a physically delivered, fully funded spot product, and that the spot markets are regulated under a different construct, the money transmitter construct. But we'll also be launching a physically delivered, fully funded futures contract as well too. And the benefits of operating that, and we're already a holder of a DCM license, so we have a license to operate a futures exchange. We're in process on our DCO. When we have the DCO, which is the clearinghouse license, we'll have the capability to be long spot on the spot side, and then be able to actually use that underlying coin position to generate a futures position as well too. Today, there's a substantial amount of friction as you go through all the gateways of, well, I'm going to take care of my spot transaction, either OTC, which is an evolving and very effervescent space to transact in nowadays, or you're going offshore and you're going from crypto to cash, then back into a derivative, then back out again. There's just a lot of friction in that trade. So our perspective is that by putting spot and futures all in the same marketplace with collateral held in the same clearinghouse, we start to bring some efficiencies, because I don't think access to liquidity is per se a problem today. I would say that to a firm that we speak to, it is the complication of moving cash and collateral around between all of these. And the fact that interbank transfers are seen as a real great development in our marketplace, I think, is not a mark of quality. So there's a lot of room to go there. So I think putting physical spot and physical futures all in the same place starts to remove some of those frictions, which should hopefully facilitate more participants in greater liquidity with the DCM and DCO, which will be coming out later on this year.
So that's Thomas Chippis, right? And I think ultimately what Bakkt and what ErisX is trying to do is trying to get price discovery. Believe it or not, cash markets like Kraken, Coinbase, Bittrex, all those retail exchanges like Gemini, Circle, over-the-counter stuff. This is where price discovery comes from right now. And BitMEX is about 20 to 30% of the daily notational volume, right? So this is the main reason why these big institutionalized companies want to get in this space. It's because you have this institutional money sitting on the sidelines and they don't want to jump in just yet. They want that same, warm blanket that is regulation. And they want to make sure that the ordering book and matching engine is also regulated. So take a listen to Adam White, the COO of Bakkt, as he talks about what ICE and Bakkt are trying to do.
Hi everyone, afternoon. My name is Adam White. I'm the COO of Bakkt. Bakkt is the new venture supported by the Intercontinental Exchange that's going to launch the first, our hope are the first physically delivered future for Bitcoin. Prior to Bakkt, I was at Coinbase for the past 5 years. And at Coinbase, I looked after our institutional products, including our exchange and coverage and other groups. is that right now we look at price discovery happening primarily on the cash markets. And those cash markets are kind of bifurcated between traditional OTC players like Cumberland and Circle and Genesis, but also the lit cash markets like Coinbase and Gemini and Kraken. And I think those markets are really important. We wouldn't be sitting up here today if they hadn't come about over the past 5 to 6 years. They've actually grown this market to one that's meaningful and shows a lot of promise. But what Bakkt fundamentally believes is that price discovery is going to occur in an end-to-end regulated ecosystem. And that's really what we're trying to bring to market. So Bakkt is providing the custodial service that allows ICE Futures and ICE Clear to trade or facilitate trading in a physically delivered product. And we believe having that product traded on a regulated exchange for the first time is going to be really important. And not taking anything away from the cash markets or the OTC markets, they're not exchanges with a capital E. So I think right now, most of that price discovery is happening on the cash markets, but what we're going to see is in time, it's going to start to switch into the futures market, and we hope Bakkt is going to be a core part of that. So I think one of the things ICE does better than most is that they take opaque, inefficient, generally unregulated or underregulated markets and bring them to be accessible, transparent, and kind of regulatory clarity. They've done it with energy, they did it with credit, and now I think we're trying to do it with cryptocurrency as well. So a lot of the work that we're doing with regulators is very much a partnership. It is not a world where you fill out an application, you throw it over the fence, and you hope you get it back so you can launch your business. It is partnering and working with regulators to help them understand things like hard forks, what a deep chain reorg is, why one blockchain, a public blockchain, may be sufficient and capable and mature enough to support while another one isn't. That's very much the approach we've been taking. And regulators are going to move at a pace at which they feel comfortable, so they're protecting their constituents, the public. And to ICE and Bakkt, to us, we look at that as something that we are going to do thoroughly, comprehensively, and we think is a core part of our business. So we keep reminding ourselves we need to move at the pace of a startup. So we need to be in this sprint mode, shipping product, hiring people, continuing to execute. But we need to look at this as a marathon in the sense that the winners and losers of this space are not going to happen overnight. It's going to happen over the next couple of years, if not decade, as a lot of this core infrastructure comes in. And we look at the only way to getting that core infrastructure in place is by helping develop regulatory clarity. And we're in an environment right now where you have 4 different regulators classifying cryptocurrencies as 4 different things. You've got the CFTC calling it a commodity. You've got the SEC calling some cryptos a security. And then you have the IRS, which is under Treasury, calling it property. So when you buy coffee, you have to pay taxes with, on your Bitcoin. And you also have FinCEN, also under Treasury, looking at it like a currency. That lack of organizational, that lack of clarity is something that we as kind of regulated entities need to work through, but we look at it as kind of core to our mission and what we hope to do well.
One of the things that will probably surprise you is that these regulators and the vast majority of this institutionalized money that's coming in, they're worried about not the retail investors. No, not at all. They're worried about these exchanges that are currently out there right now. And I'm not talking about like the ones that are regulated here in the US. I'm talking about the ones that are not regulated by US. These are the BitMEXs, the Binances. These are the main 2, in my opinion, that regulation is looking at. But they can't do anything about it. It's out of their jurisdiction, right? But the vast majority of volume, believe it or not, 30 to 35% of volume comes outside the US, right? And I know there's a vast majority of us inside the US that are, trading outside of this country, with a VPN or with something else. But this is where right now most retail investors that aren't fully collateralized into digital assets here in the States are going to, right? And Bakkt and ErisX, and CBOE, they're all looking at BitMEX because it is the most liquid of order books in Bitcoin. That's just a fact. Take a listen as they discuss what to do about BitMEX.
So the most valuable order book in crypto is managed by a company called BitMEX. They're domiciled in Seychelles and they operate in Hong Kong. And the amount of notional volume that they transact is probably somewhere between 20 and 30% of daily notional. And it is the pricing reference, has the most liquidity of any order book in Bitcoin or Bitcoin-like products. And they've innovated not just the regulatory arbitrage, but also a really unique product that has economic incentives and mechanisms to keep the futures price very closely tracking some spot prices. It's fascinating engineering of a financial product.
Yeah, I think it was interesting. I mean, obviously BitMEX, I think, is doing interesting things in this space, but the model they deploy is not the same model that participants can enjoy from central clearing and being a regulated clearinghouse and a regulated exchange. The concept of socializing losses and kind of the mutualization of risk and things like that is very different in that space, where when there were some kind of losses being handled on the BitMEX platform, we saw spikes in our volume at the same time because people are getting put into risk that they necessarily aren't signing up for at inception. So when we look at the central clearing model, these are the benefits that customers want, especially when you're talking to the institutional players who are still waiting. Some of it is going through investment committees and risk committees and new product approval, but a fundamental aspect of the listed regulated venues that in the US that we're looking to provide through the DCO services and the clearing services is that as a clearinghouse, we are the buyer to every seller and the seller to every buyer. We guarantee that trade, and that's not something that exists in the OTC unregulated space. So I think that's a benefit that people enjoy, and that's actually what gives, I think, a large degree of comfort to some more traditional players and institutions in making that move into crypto. So I think that's one of the largest, and I think we're kind of hearing that, from the regulated venues, that's probably still one of the original customer demands and remains as strong today, that they want a centrally cleared, regulated product for them to be able to risk manage and enter the crypto markets.
I'd like to push back a little bit on that. I think that crypto and crypto native, and certainly the future, gives us the opportunity to require less trust. I think that's the ultimate goal for decentralized technology, and I think there will be a way to either self-custodian or not necessarily rely on a lot of centralized infrastructure at some point and rely on public blockchains.
Yeah, I don't agree with that. I don't think when we're talking about financial transactions, we need less trust. I mean, I think that's fundamentally or diametrically opposed to our viewpoint from the benefits of central clearing, because one of the things as you need to manage your risk is you need to understand the rules of the road and have a degree of certainty about how those events will unfold when you need to manage said risk. So it may be decentralized, and that's certainly an attractive aspect of the technology and the space. But central clearing, it provides the trust to get market participants to do these things and provide liquidity, and you need certainty at delivery.
Maybe to Tim's point, one thing I like to differentiate is we kind of unfortunately bucket all of crypto together for the different processes or things people are doing. And in one way, trading in markets may better well be served in a centralized, more holistic framework that kind of fits in with the existing financial system, because these products are regulated, and there's no way to avoid that unless you go offshore. But the actual application and utility of crypto, I do think, to Ron's point, that decentralization can be powerful. So it is this idea that if you actually want to store your own crypto, you absolutely can. If you want to build an application on top of a public blockchain, you can do that in a permissionlessly innovative way, and I think a lot of great stuff will come from that. But when you really fundamentally double click on trading in markets and price discovery, I do think the vast majority of capital that's waiting on the sidelines will not come in for things like self-custody or mutualized losses via no clearing or an alternative clearing method. They are looking for this asset class to fit inside the bucket and the processes that they're used to, and that's where we're going to see the most growth.
And so that leads us to retail investors. That's you and me. That's everybody that listens to this podcast. These are the people that Bakkt is trying to go for. And they're also going for the people that aren't invested into Bitcoin or other digital currencies right now. So they're going to do this one of two ways. First, they're going to build out this regulated exchange and regulated order book and matching engine, right? And they're going to launch Bitcoin, and then they're going to try to control price discovery, or at least attempt to control price discovery. At that point, they're going to look to retail investors, right? Because they want to help with doing the same things that we've always tried to do. And that's, move over people that don't think like us, that aren't crypto native, that aren't thinking of, crypto as money, as scarce money, right? They're going to do this by launching into Starbucks. This is going to happen. A lot of people look at me and laugh when I tell them that, they're going to roll out into Starbucks and allow Bitcoin acceptance, right? At Starbucks locations. And Bakkt and ICE are going to be the companies to do this. And it feels very good because they just confirmed it right now. Take a listen.
Very fortunate to have some very large retail platforms as investors in ErisX with TD Ameritrade and Fidelity and Monex, the parent company at TradeStation. So we think it's very important. And we think one of the reasons that you're not seeing the same level of retail uptake in the US is most people do not want to go through a process of setting up accounts with an entity they're not familiar with to trade a single asset class. As convenient as it is to take a picture of your license and credit card from your phone and voila, start trading, I would put to you that the majority of people that trade through platforms today, such as TD or Fidelity or what have you, are doing it because they have investments of different types for different characters. And what they want is convenience of access and the other feature set that those particular intermediaries provide to them. So albeit there's certainly millions of people trading on all these other platforms, there's probably people who are really, really interested in being part of crypto. But over time, for this to grow, it needs to find its place in the broader portfolio allocation that will be made. I don't think a lot of people have their portfolio reviewed by an RIA and are told you really need to have 5% of this in Bitcoin today. Yeah. That day may come. Maybe it'll be Ethereum, maybe it'll be something else. It really is the use cases develop more, then the investment case will become clearer. But certainly ErisX believes that all these intermediaries actually add value, and that's sometimes antithetical to a crypto native who says, why would I ever do that? Well, not everyone's trying to solve the same problems or they have the same ethos, but they still might want to invest in this asset class. So we think at least what we're doing enables those platforms to bring their customers in, whereas today the majority of those customers probably aren't willing to participate with the tools or markets that are available to them now.
This market wouldn't even exist such as it is today without retail. And so we talk about institutional because that's the next sort of frontier. And it's all the folks, the nativists, the people who really believe in the inherent unique characteristics that Ron's pointed out, the decentralized nature of the asset that's attracted so many people in these early days. All the infrastructure has to get there for more retail, and that's quite possible it'll happen. But again, it's early days. A missing piece I pointed out last year, and I still haven't seen a good answer for it, is research, basic information. It's overwhelming for a retail investor with a day job to really know what to do here, which asset, at what point, what are the trading characteristics? Is it a risk asset or is it a safe haven asset? Like, nobody knows the answer to those questions yet, and it'll come, but we're just so early.
Yeah, I think the one thing I would add from the CME perspective is retail is a critically important customer segment. In 2018, our retail trading was up about 27% at CME Group, where they traded over 660,000 futures contracts per day across all of the various asset classes and product suites. But I think this is also something where we're continuing to focus not just on cryptocurrency, but other asset classes where it's probably the first time in 2 years I could bridge both of my job functions, where we launched Micro E-mini Equity Index futures for retail earlier this week, or announced the launch. But to Adam's point is, I think what's interesting about the retail, and that's open how you could define the retail segment, is I think what's important is when you think about futures markets and derivatives markets, a cornerstone of that is true fundamental commercial need and purpose. And I think, unlike other asset classes where that may be farmers or shippers or financial institutions, I think what's interesting to watch is the retail segment going to be that commercial provider of the, let's call it, the organic need, that provides that persona into the mix, because you need these multiple customer personas for people to trade and to disagree on price, to build these markets and take viewpoints. I think that'll be interesting to watch as well.
But I think it's Bakkt's perspective and mine personally as well that cryptocurrency, or maybe better said, public blockchains, are going to be most successful when nobody knows they're using them. So when I walk into Starbucks and swipe my credit card, I have no idea how an issuing bank talks to an acquiring bank with interchange, and all that happens seamlessly. It's transparent to me. So my thought is that as we start to find uptake with actual permissionless innovation happening on top of the cryptocurrency protocols, and we're seeing payments and remittances and information storage and value transfer happen, that flow will ultimately be driven by retail that may come in via an institution back into the market, but it's going to be retail driven. I think that's going to be a really important step function and possibly the next catalyst for what we might see as a bull market in crypto. This is exactly why Bakkt is built, doing not just trading and markets and price discovery, but also doing the Starbucks first use case, which is here's a way for retail commercial users to use Bitcoin, and that order flow will come back into the market. To me, it's not enough just to say we're going to invest a ton of money into market infrastructure and hope someone else figures out why we're going to use this. To the point earlier that John made, if it's all baked in this assumption that in the future it's going to be worth more, but there's no fair way or kind of ubiquitous way to value it, I think we are going to see volumes continue to flatten and the price probably to trend to zero, because everyone's baking that in the future public blockchains are going to be more efficient, they're going to be cheaper, they're going to be faster. But it requires companies building actual use cases and applications on top of that. So, I tip my hat to the Coinbases of the world that are saying we're building market infrastructure, but we're also out there innovating and experimenting and trying to do things like, non-custodial exchanges and use cases. And I think Bakkt wants to do a little bit of that as well to help, I think, all of our companies ultimately see more flow.
Overall, the launch date for both ErisX and Bakkt is entirely uncertain at this point. We know of the testing phase for Bakkt on July 22nd, but as far as ErisX, we just know it's going to be later this year. I would imagine Bakkt being in partnership with the regulators in the space, it's very likely we might see an ETF later this year. And if not later this year, then it will happen next year for sure. At least that's what I'm seeing here on my side, just from all the research I've done, just from looking at some of these connections with Bakkt internal and regulators in the SEC internal. They want to make sure that they have a stance. Regulators do, but it's going to take some time, right? They need to have those foundations in place. They want to make sure that they're looking out for retail investors and the general public on Main Street. But whether or not that happens or not, we're still going to see Bakkt get rolled out at some point later this year, and ErisX as well too. At that point, you have the institutionalized foundation for these people with a load of liquidity able to onboard into these commodities. So that's what they're going to look at Bitcoin as, a commodity, right? Kind of in a weird sense, it kind of is, but it kind of isn't. But for them to make sense of it, they have to look at it that way. That's why the CFTC, who regulates these futures markets, granted the DCO license to ErisX. But overall, what ErisX is doing with this new DCO license, and they already have their traditional DCM license, and what Bakkt's going to do later this year, along with the Starbucks initiative, everything's looking really bullish for crypto right now, for Bitcoin especially. I would say, and I've been saying this for some time, once they get this in place, once they have all the regulatory approval and this regulatory foundation in place, right? Once you build the foundation in place, they're going to start looking to other crypto assets. And it was interesting because I've been saying for the longest time that they're going to look to Ethereum. I don't know if anybody else talking about this. I know I've been very bullish about it. And sure enough, this is what they talked about. Take a listen.
I'd say by far I'm most interested in the protocol level developments that are happening to actually scale public blockchains. So taking a step back, and what we kind of spoke about is all this infrastructure we're developing is to allow trading and markets and price discovery, but it's this huge assumption that people are actually going to use public blockchain tokens, those physical assets or digital assets, in the future. And I think everyone's pretty aware that right now we've seen so much growth and adoption and interest that the public blockchains are having trouble scaling. So whether it's the number of transactions or the throughput or the stability, or things around governance, how do you actually manage changes and hard forks? Those are real challenges. So what I find most interesting are things like what Ron mentioned earlier, Cosmos, which is kind of a meta blockchain that sits on top of all the other blockchains to kind of unite them. It could be things like Plasma or Lightning, which are on and off-chain scaling solutions on certain blockchains. And to me, that's where there needs to be continued interest, but also continued development and funding. And what Ethereum recommended last week was putting a very small tax, like a fraction of a penny, on every transaction that goes to the long-term support of Ethereum developers that are actually building and improving upon the protocol. To me, if we lose sight of that and we build all the layer 2 and layer 3 pieces on top of the actual protocol, that protocol is not successful. All this is for naught. So that's something I like to stay pretty close to, and the Bakkt team does.
And I think in terms of, not necessarily a statement on CME's product pipeline, but I think just in terms of articulating the customer demand, the next one that we get asked most about and most represented to us is Ether. And I think that's also why you see things like the RFI and the process and much more open discourse and dialogue on that. That's clearly the next one that we get asked about the most, but we're focused on Bitcoin futures for now at CME.
Yeah, I was going to argue that the public statements are always the best things to observe, and the fact that the RFI for Ether went out, and certainly ErisX filed a comment letter in response. Ether is the obvious one, probably things like Litecoin or other Bitcoin derivatives, most likely, and by derivatives there I mean other forms of, just to confuse the terminology. But I think when thinking about some of the things that Ron mentioned, those are probably another order of just market thinking and development that's going to need to take place, but are definitely worth watching. But between here and there, things that look like a store of value and or an input into a production or manufacturing process of something else probably starts to feel like a commodity, and if so, certainly should be up for consideration.
So as you can tell, this is all good news all around, and this is one of the main reasons I wanted to get this out this week. I felt there wasn't that much time left because in this space, there's a lot of people that are paying attention, but there's the vast majority of us aren't paying attention in the right direction that I've noticed being in this space for some time. The fact that I missed this whole speech and this whole conference, and when I finally looked it up, it only had like 59 views. That's scary to me. That's scary to me because it tells me that the CoinDesk is, and the blocks of the world, and the AMB cryptos, and the Bitcoin magazine, it's telling me that they're not focused at all. Maybe the block, I would say they are, as far as institutional side. They're looking at that, right? But it's telling me that they're not looking at everything. These different outlets, they're supposed to be news outlets in our ecosystem. They're not looking at everything. The fact that they missed this entire conference in April is just alarming to me. The fact that it only has 59 views and no one's talking about it is alarming to me. The fact that when the lady who was doing the moderation for the panel asked the audience to ask them a question, and she got this response.
Great, thank you. I should open it up for audience questions. If we have any, we should. You have like an amazing group of people here. Anyone?
All that is very alarming to me. It's alarming to me because no one's paying attention. No one's looking at this from any angle other than what they see in front of them. And it's scary. It's scary because I have a feeling, and it's just my crypto gut, as you would call it. I think a vast majority of us are going to be surprised when this happens. When Bakkt starts releasing this stuff, and they start seeing the Starbucks initiative, and ErisX starts releasing this stuff, I think a lot of us are going to be surprised. I think we're going to start seeing some elevator upward momentum in Bitcoin, and it's going to look like April Bull's Run all over again, where it's going to double within a 2-week window, and a lot of us are going to be like, why is this happening? And no one's going to know the answer. But to me, I'm going to say, well, if you were paying attention, you would know this is all the information that was already put out months in advance with their game plan, what you just heard of how they're going to accomplish it. They're not trying to hide this information. It's just that people aren't paying attention to the true players in the institutional space making these moves. Don't get me wrong. I am highly proud of what Coinbase has done, what Gemini has done, and what Circle has done. They've created these cash markets for us retail investors to get in early. I think when this institutional space actually gets in there and actually starts trading and buying these crypto assets, it's going to be up to us, retail investors, retail builders, to continue this progress in this space. It was alarming to me that Bakkt said that they were actually looking into Cosmos. Like, that was alarming to me because that tells me that they actually are looking at the technology and not just looking, at what is, not a real, true, decentralized platform, right? So they're paying attention. They're paying attention to the same stuff that we're paying attention to. At least Adam White is, Bakkt is. So they're looking, they're paying attention, they're understanding how this ecosystem is working, they're navigating the crypto space. And I hope to bring this to y'all as well. And that's my job, is every week to find something that no one is looking at, that no one's focusing on. It's kind of like this. Seeing what this is, recognizing it as true, like, informational gold, and delivering it to y'all in this tidy little package so you can stay ahead in all your crypto investments and know what's coming and prepare for any situation. So this is going to be another episode of Thriller Insider. Thank you so much for subscribing, and thank you so much for listening. I just wanted to make sure I got this out as soon as possible, because as soon as I discovered this on the 3rd, I believe it was July 3rd, I was like, oh my gosh, like, I need to get this out as soon as I could. But to be honest with you, there's there's a lot of information in here. And right now I'm actually looking into reading the Oxford Handbook of Financial Regulation. It's like a 700-page book. It looks really fascinating, but it's supposed to kind of explain how this whole financial market is regulated and reformed and developed, and what they do in crisis conditions, and how they've undergone, exponential growth through the last 30 years, and of course in 2008. So I'm trying to get caught up to speed on their end because I feel like as Bakkt comes in, as ErisX comes in, there's going to be a lot more words, and there's going to be a lot more nuances that I'm just not going to understand unless I look at doing some research. And that's one of my things this weekend, is to down this handbook of financial regulation and understand it better. So doing all this for y'all. Hopefully we can get to a good place here in the near future where this all just comes kind of second nature. And hopefully we can get to a place to where we can all see Bitcoin get to where I think it could be. And hopefully they take a look at other crypto assets as well too. It was interesting. They said Litecoin, which was kind of weird. I didn't see that coming, but another reason to hedge Litecoin, I guess. Okay, with that, see you later.